Welcome to Cat Eye US Stock. We watch markets with calm focus and sharp instincts. It's Friday, April 3rd, 2026. Good Friday. So US stocks didn't trade. But the market wasn't quiet. It was just forced to wait. A hot March jobs print, plus an Iran-driven oil shock premium, just sat on the desk all day with no cash tape to absorb it. So the tone into Monday? Not clean risk on. It's cautious. Selective. And the big theme is simple. Nothing actually got resolved today. Price discovery just got deferred. Now, zoom into the S&P 500 Heatmap from the latest tape. The board looks choppy, with a slight green lean but not a decisive breadth day. You've got brighter green pockets in tech, especially semis and some software. At the same time, staples and utilities are also green, which tells you participation was hedged. And your eye gets pulled to a few deep red outliers, moves that feel stock-specific, but still change the mood of the whole screen. That heat map mix points to a pretty clear money flow shape, a barbell. On one side, investors were willing to pay for selective tech, semis, and the mega-cap stabilizers. On the other side, they also hid in defense, staples, and utilities. Meanwhile, the funding source looked like parts of consumer discretionary, dragged by Tesla, plus heavy pockets in healthcare, and an idiosyncratic hit in industrials. So it's upside exposure, but with a seatbelt on, Now layer in the part that makes this setup tricky. The market was closed. If you had exposure you didn't like, you couldn't work it in the cash session. That's holiday friction. And it matters, because the backdrop is already tense. Fresh jobs data and a geopolitical oil premium tied to the Iran conflict. Add in the masking effect we've been seeing, mega-cap strength keeping the index optics calm while weak links break, and you end up with one big implication. Monday's open is where this gets priced. All at once. On Chatter today, there wasn't a long list of rumors making the rounds. The one explicit caution flag in the notes was GE. The move was described as idiosyncratic industrial selling, with no specific headline confirmed in the sources reviewed. So treat that as an information gap, not a full narrative. And with the market closed, it's easy to overread noise. Monday's open is when we get real confirmation, in actual liquidity. Tesla, TSLA, was the emotional risk barometer, and it broke. The stock fell a little over 5% after first quarter 2026 deliveries missed expectations, about 358,000 delivered versus higher street estimates. The key point isn't just the percent move, it's that a sharp high-profile drawdown in a high-beta discretionary name can sour the tape, even when other parts of tech are holding up. Intel INTC stood out on the upside, up just under 5%. The notes frame it as a semiconductor and turnaround bid, consistent with recent Intel-specific positive flow and renewed AI and semis appetite. Why it mattered? Intel's strength can look like broadening within tech leadership, money moving beyond just the usual winner. AMD was another clear tell, up about 3.5% alongside broader chip strength. In this storyline, AMD acts as a high-beta AI and compute proxy. So when AMD is green in a choppy market, it supports the idea that the AI complex is still absorbing macro noise, at least in the most recent tape context. Microsoft MSFT was up just over 1%, and the notes frame it as a mega-cap stability bid. This is one of those stocks that can keep index optics calm on a messy screen. But there's a trade-off. When Microsoft is quietly green, it can mask fragility underneath because the index looks fine, even if participation under the surface is uneven. Nvidia was up just under 1% and stayed constructive. The notes call it the psychological steering wheel for AI risk. That's the point. When Nvidia holds green, it tends to keep dip buyers confident across the broader AI complex. If it doesn't, the mood can change fast, so it stays central to Monday's read. Exxon XOM sits in this story as the clean geopolitical inflation proxy. There was no April 3rd cash session, and the last verified close in the notes was basically flat, around $160.69 on April 2nd. The bigger point: elevated crude tied to Middle East conflict risk can keep inflation and rates anxiety alive, capping equity multiples, even if growth tries to bounce. Looking ahead, Monday is the first real reprice, because Friday's cash session never happened. On the calendar, Monday, April 6th at 10 a.m. Eastern, ISM Services PMI. Tuesday brings durable goods. Wednesday is FOMC minutes. Thursday has core PCE, final GDP prints, and jobless claims. And Friday, CPI plus consumer sentiment and inflation expectations. With that lineup, the question isn't just direction, it's whether the market stays in that barbell posture or broadens out when liquidity returns. So the wrap, today didn't give us a print, it gave us a setup. The market stayed stuck with jobs data and an oil risk premium, and the latest tape context still looks selective. AI and semis holding up, defensives quietly bid, and weak links getting punished. Into Monday. Don't just watch where the index opens, watch breadth. Watch whether leadership expands or whether the same few names keep holding it together. Thank you for watching Cat Eye US Stock. Stay curious, stay calm, and we'll see you next time.